Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of the business world one filing at a time. And let me tell you, this latest report from Hyperscale Data Inc. has a few interesting moves that might surprise you. Before we dive in, if you love getting these corporate secrets unpacked without the confusing jargon, make sure you hit that subscribe button. We also have a growing Discord community where we break down these filings further, so definitely check the link in the description below. So what we're looking at here is a Form 8K, which is basically a report that companies have to file when something significant happens, something that investors need to know about right away. This particular report from Hyperscale Data Inc. is dated September 3, 2025, and it tells us about a recent transaction. Let's get straight to the main event. On September 2nd of 2025, Hyperscale Data Inc., or the company as they call it, here entered into an agreement that basically means they sold something important. They sold 4,000 shares of something called Series H convertible preferred stock. This stock is pretty special because it can later be turned into regular common stock. The buyer in this deal was Alt & Company Inc., who also happens to be an affiliate of Hyperscale Data Inc., which means they're connected in some way. This purchase was for a hefty $4 million. Now, here's a key detail. This was the very first purchase of this particular Series H stock by this buyer. But the agreement allows them to buy even more, up to a massive $100 million worth of this special stock. So this $4 million deal is just the beginning of a much larger potential investment. Remember how I said the buyer is an affiliate of the company? This is important because companies sometimes use related parties for transactions. The filing tells us that the terms of this deal and the preferred stock itself were already explained in a previous filing, an 8K from August 1, 2025. So if you want all the nitty-gritty details on what makes this stock convertible and what those terms are, you'd have to go back and read that one. This whole transaction of selling the Series H convertible preferred stock is being reported under a section about unregistered sales of equity securities, which essentially means they didn't go through the usual public registration process when they sold these shares. They're relying on an exemption from the normal registration rules under a part of the Securities Act of 1933 called Section 4-M. This is common for private placements to a limited number of sophisticated investors where the company believes registration isn't necessary for investor protection. The filing also lists which stocks are registered and traded. This includes their Class A common stock, which trades on the NYSE American under the symbol GPUS, and also their Series D cumulative redeemable perpetual preferred stock, which also trades on the NYSE American under the ticker GPUSPD. Looking at the table here, we see the Class A common stock with its very low par value of 0.1. This is extremely common for publicly traded companies offering a large number of shares, and the NYSE American is where it's traded, which is a well-known exchange. Then we have the 13.0% Series D cumulative redeemable perpetual preferred stock, also with a nominal par value of 0.00 false, unwanted number value of 0 Kent case E00 common stock, like priority for dividends. The 13 advantages over common stock like priority for dividends. The 13.8 back under certain conditions and due and dividend rate, especially in some market environments, and the perpetual nature means it doesn't have a maturity date, although redeemable means the company can buy it back under certain conditions and zero veneer environments. And the perpetual nature means it doesn't have a maturity date, although redeemable means the company can buy it back under certain conditions. It's also important to note that Hyperscale Data Inc. is not identifying as an emerging growth company. This means they're not taking advantage of the extended transition periods for adopting new accounting standards that some smaller companies can use. So putting it all together, Hyperscale Data Inc. has just secured significant funding from an affiliate through the sale of preferred stock. This points to a need for capital and a willingness to use existing relationships to get it. The fact that it's convertible preferred stock suggests they might be looking at future growth that they believe will make converting these shares to common stock very attractive for the investor. Now, let's see what this means for the company's direction. Hyperscale Data Inc. is in the business of providing data center solutions and infrastructure. As a company in this sector, they are positioned to benefit from the massive growth in data usage, AI, and cloud computing. However, it's a highly competitive and capital-intensive industry. This $4 million infusion note's a start, and with the potential for another $96 million, it shows a strong signal that they are actively pursuing growth capital. The use of convertible preferred stock is a strategic move. often used when a company wants to raise money without immediately diluting existing common shareholders. Instead, it offers future dilution that is tied to the company's success. If the stock price goes up significantly, then the conversion becomes more valuable for the holder and more dilutive for existing shareholders. The key risk here is execution can Hyperscale Data Inc. effectively use this new capital to grow its business, expand its capacity and outcompete rivals. If they can, then this funding round could be a major positive step. If not, they might face challenges integrating new facilities or services which could impact profitability and shareholder value. In conclusion, Hyperscale Data Inc. is making a strategic move to secure substantial funding through an affiliate. It signals an ambition for growth and a need for capital. The game here is whether they can translate this financial injection into tangible business expansion and profitability. The next few quarters will be crucial in showing if this investment pays off for them and their shareholders. What's your take on this deal and the company's future? Let us know in the comments below if you found this breakdown helpful. Please give it a thumbs up and subscribe for more deep dives into the financial world. And don't forget to join our Discord community for more discussions and insights. Thanks for watching, and we'll see you in the next one.